It's time for the business news now with Emma Hatton, who's in our Wellington studio. Emma, NZME has made a first half year profit. Well, how did they manage that?
Yeah, that's right. They did make a profit in the first half of the year. So this is the 6 months to June. They made $3 million. And so this is the company, of course, that runs Newstalk ZB, the New Zealand Herald, a number of provincial papers and radio stations like The Hits and ZM. And their profit was up on the first half profit they made last year, which was $900,000. And they had a really challenging first half. So we'll just go through what happened and how they managed to make that work in their favour. So they hadn't headed into the year strongly. They made a full year loss last year of $165 million when they had to do a massive write-down in the value of their business. They had a hard time last year with the advertising market, the whole industry did, as well as declining print circulation revenue. Then the pandemic began, advertising revenue slumped, so it was down 47% in April and down 39% in May. And it hasn't bounced back, but it is recovering. It was about 23% down on June. So that was a really big knock for it, and it did a number of things to mitigate that, and it moved quite quickly. So it temporarily suspended its community papers, publishing those, and also a lot of those magazine inserts that went into the newspapers and things like that, stopped those. It ceased its broadcasting of radio sport. There was a big restructure, which you'll probably remember, where 200 roles were disestablished, which was about 15% of its workforce. The directors of the company, as well as the staff that was still on the books, were all asked to take voluntary pay cuts, and it did get some government assistance, so it received some money to do with its transmission costs just to ease those, which helped it out. So all of that saved it about $24.5 million. And it's actually going to save it, it's actually reduced some of those permanently. So about $20 million every year from here on out, it's going to basically save because of those changes that it's done now. It also got the government wage subsidy, $8.6 million, so that helped it along as well. So those savings plus the subsidy kept it in the black, basically. And, you know, the first half, you remember, it was quite controversial. There was that failed bid that it put forward to buy stuff for $1. It did incur some costs in the first half to do with it, actually, about $188,000. So I had a lot going on, but it's actually doing really well. It's paid subscribers, so this is that premium content which you can pay for, went up. So I had 21,000 subscribers at the end of last year. That's now at 43,000. And if you include those who get the online content with their print subscription, that's at 82,000. So really good growth there for them. And it's really looking at ways that it can expand and move forward. It's setting up more resources in Wellington and Christchurch now. So it's moving out of that Auckland-centric focus that it had for a really long time. So it's moving into those areas where its rival stuff has quite a strong hold on the market share. So interesting to see what will happen there. And it's actually hoping to make a full year profit by 2021, maybe return some dividends for its shareholders.
Interesting. Okay, so the accounting software firm Xero, it's got itself a new lending platform. Now, what's all that about?
Yeah, I thought I should put this one on the topics list for today because it's a little bit quirky and it's quite topical. So this just shows the innovation that's out there to get cash to small businesses quickly. So this is a platform that's connected to your bank or your lending facility. So if you've got a parent company or something like that, and then it connects to your Xero account. And Xero is, of course, an accounting software firm where you issue invoices out to your clients, and then they pay you through the link that you send them. And so what it does is it sees the invoices that you've issued and that you have outstanding, and basically uses that as a guarantee of the money that you're going to be getting in at some point. So if you need the cash before the invoices come in, you can draw down through this platform via your lender and basically get the difference as soon as you need it. And there's criteria and whatnot to make sure that you fit the bill. But that's the gist of it. And it's really interesting because delayed payments for small businesses is a real pain point for them. And it's commonly, a small business that provides a service for a larger company. They invoice them for it, but they don't get paid sometimes for weeks. And basically the big business is using the small business as a free line of credit because they're not paying them. They're holding on to their cash for now. And so actually the latest information that we had from Xero is that the most common invoice period was 7 days, but the most common payment timeframe was 30 days. So that's a long time that people are having to wait for these companies to pay them after they've already done the service. So this is one way of balancing that problem. However, I've talked it up now, but Xero is, of course, available in New Zealand, but this particular service probably won't be for the next couple of years. There's a lot of work to do behind the scenes to get the banks and everything all on board. It's available in Australia and the UK, where access to bank and data information is a bit less restrictive. But with the right privacy and regulatory framework, it would probably be quite helpful for a lot of small businesses out there. And it just goes to show, what sort of is chugging away in the background. Don't just have to go straight to your bank for credit anymore.
Well, you built that all up and then let us down gently. Let's take a pulse of the market. The pulse of the market today, Emma. What was it looking like there?
Well, interesting on the market today, actually. It appeared, the website and the trading platform appeared to sort of crash a little bit in the afternoon. So it's hard to tell if the numbers we've got are correct. So nothing wrong with the stock market itself. Just seems like there was some connectivity issues with the actual website. So an NZX spokesperson says that there was an outage of some sort, some connectivity issues, and the team is investigating. So the numbers that we do have is looking up 11,993 points. So we do expect it to finish up higher. It was tracking up through most of the day. The New Zealand dollar trading at 65.2 US cents, 91 Australian, 49.8 British pence.
Thanks, Emma. That's Emma Hatton joining us from our Wellington studio with your business news today.